What's going on, guys, and welcome back to another video. So today I want to explain a financial crisis turning point that we are actually facing today. And the reason we're facing this is because over the past 3 years we have seen an increase in our expenses, but at the same time we have actually decreased our income. And these things have happened because we would purchase new vehicles, we bought a bigger, more expensive home, right? We've been tacking on credit card debt and buying more expensive food and all those things. But by doing all these things without increasing our income, it's creating a financial turning point. Here's what I mean. Here in the United States, our expenses have surpassed our income. For many people, they're living on credit card debt. They survive by putting something on a credit card. And let me ask you this. How many credit cards do you have? And are they all closer to being maxed out, or are they closer to being paid off? Let me know down in the comment section below. For the majority of people, they are using credit cards just to survive. It's not an emergency, okay? It's survival. It's past an emergency. That is critical. But this is also a horrible path to be on. When your income is decreasing because of inflation, because of the increased expenses that you've occurred over the past 3 years, that's troubling. But here's a fact. Most Americans receive less than a 5% wage increase in 2022. We have inflation at 7.2%. This means they're still behind by 2.2%. This is a fact. Employers for 2022 anticipate a much smaller increase this next year. It's going to be about 3 to 4%. But again, inflation is likely to be over 5%. So are you going to be getting a raise? No. You're technically going to be getting a deduction, right? They're going to take money from you. That's what's happening. Now, here's why I call this a turning point into a financial crisis. And that's simply because of multiple comments I've been getting lately. Because people are trying to get out of debt, trying to get out of trouble. Well, guess what they're trying to do? They're trying to move vehicles. Let me read you this comment, and it reads, and I quote, "Thanks for all you do. I really appreciate it, but I could use some help. My employer cut my hours by 6 hours per week. I currently make $15 an hour, so I will lose about $360 every month. My only expense that I have, which I can get rid of, is a car payment. I pay $700 a month, and I'm thinking about getting something much less expensive to reduce that cost. But my problem is I can't sell my car for what I paid for it. It is now worth approximately 20% less. What should I do?" Here's the thing. This person is not in this situation by themselves. There are millions of people in this exact same situation. I have friends that purchased vehicles in the past year, overpaid for them, and then they dropped by 15 to 20%. So this is something that's common across car buyers all across the United States. Now, what I told him, and again, this isn't financial advice, I told him, go talk to your lender. Your lender will give you the options. Your lender will tell you what they can do. Most are probably going to say, well, if you can't make your payment, we're going to take your car back. Banks don't want the cars back. Lenders are not in the business of buying and selling cars. They're in the business of lending. So most of them, they have an outlet. They will usually go and auction off your vehicle, and whatever they get for it, that's taken off your amount, and then you pay the rest, which you could, in some cases, you can refinance that loan. But in most cases, they want the same payment. You'll just pay off that vehicle a little bit quicker. But if it doesn't bring your payment down, and that's where you're struggling, that's what you need to let your lender know. Okay? Now, talked to somebody from a bank just the other day. They said We are getting calls probably 2 or 3 times a day from people wanting to just give their car back to the bank. But in many cases, the bank isn't the one that actually has the debt. They've gone and resold that loan to another bank. But they come to the same bank or call the same bank that they went to go and get the loan. So now this is something that, it's not 2 to 3 calls per day. It's 2 to 3 more calls per day. So it doesn't say, how many calls this bank normally gets per day, but they're getting 2 or 3 more calls. So initially, if they were getting 2 or 3 calls per day, and now it's 2 or 3 more calls, it just doubled. 100% increase. That's crazy. But here's the problem for millions of Americans. Millions of Americans are paying over $700 for a car payment. The new car payment in the United States in 2022 is $700 or more. For a used vehicle, it's $525 per month. Yeah. The issue is that millions of Americans have overspent for the past 3 years. They spent money on things that can't easily be unloaded and sold off. And right now, everybody's not concerned about inflation. We're concerned about a recession. And nobody wants to be spending money at this time. Now, I bring all this up simply because of one main reason. In 2023, inflation is not going to be the big worry. No, it's not. It's going to be a recession. Are we going to end up in a recession? Most people say yes. It's going to happen within the first 2 quarters of 2023. And it's because of that, you can't wait until the last minute to decide what to do. Do I sell off my car? Do I stop making payments? Do I pay my utility bills? Do I pay my rent, my mortgage, medication, right? Hospital bills? What do I do? That's going to be the big question. So start now and protect yourself. Make sure you have enough money set aside. Make sure you cut back on expenses, right? Reduce your monthly recurring costs, right? Netflix, cell phone, apps, gym membership, things like that. Do anything in your power to live well within your means over the next 6 months. Financial experts say that if you can live within your means over 6 months, it will not just create additional financial stability, but it will create new habits, new savings and spending habits, and that could potentially save you. Now, if you can do that, 2023 will be much easier. But if you can't, then these purchases that you've made or we've made over the past 3 years, this is potentially going to cause a financial crisis here in the United States. Banks are going to feel the pain. The American people will feel the pain. We are going to struggle over the next year if people cannot get their finances under control. Again, income is dropping, expenses are going up. We need to flip this. And income goes up, expenses go down. That is how we live a much better life. So that's what I can tell you at this time. This is potentially turning into a financial crisis. We have to figure this out. We have to really control this before we get farther into, really deep into 2023. If we wait too long, it will not happen. So that's what we know at this time. As always, as I know more, I promise I'll come back on and share all latest news and updates. My warning to you, though, is just be ready, be prepared, increase your income, and decrease your expenses. Do that now and make 2023 a much easier year. So again, thank you guys for watching. Consider subscribing, and I'll see you guys on the next one.